Welcome, welcome, welcome. This whole time I was yapping my mouth. The mic was off. Welcome to day 4 of the 5-day boot camp. Um, like I said, day 1 and 2, I was a little sick, so I couldn't really give y'all my best. But now day 4, I'm feeling better. We back, feeling good. So today we're gonna cover some good things. So first thing first, some of the things we are going to cover today. Number 1 is going to be kill zones. We will cover today kill zones. What is kill zone? Kill zone is the time frame. The time frames, and I'm not speaking about these time frames. I'm referring to the time of day that we're expecting to see high volume in the market. Okay, so I'm going to give you a little bit of details for that. So let's speak on it. Next thing we're going to also uncover is the Asia session. We're going to speak about the Asia session and what it represents. The third thing we're going to speak on is the London and New York sessions. The London and New York sessions. We're going to cover that as well. Fourth, we are going to cover time-based manipulation. That's something that's very important because time-based manipulation and time-based liquidity is extremely important for your kill zone because during those time is where you're likely to get the inducement of the day that leads to the big move. We'll speak on that as well. So first and foremost, let's speak on kill zone. So for kill zone, you have London, which is a high volume session. There's about 3 sessions. There's the Asia session, the London session, and the New York session. The biggest 2 sessions are the London and New York session. And there is a time when New York and London cross over. So London, if you're on the East Coast or if you're in the United States, uh, London for us, if you're on the East Coast, it starts at 3 a.m. And the kill zone for London is at 6 a.m. So it's about a good 3-hour window where you're going to get a high volume. That's where the banks are most likely to be involved. For a New York session, your kill zone, you're looking at 9 a.m. when the banks open till about 12 p.m. when the banks go to lunch. Usually around that time, this is if you're on the East, with Eastern Standard Time. Obviously, if you are in Pacific Standard Time, meaning you're in California or the West Coast, that 9 a.m. would be 6 a.m. for you, and this 3 a.m. will be 12 a.m. for you. So you just adjust your time accordingly. But you can always visit a website called babypips.com in order to get the proper time, babypips.com. You can use this website and it allow you to see the proper session times that are available to you. All right. So now I wanted to use today's live session to go over the kill zone so you can see how time-based manipulation that happened within this time window, how it allowed me to catch my trades for today, for example. So we're going to go on today's trade as an example. Today, I took a sell in the market, and this was based in the New York session. So let me turn on my kill zone range. Okay, as you can see, I've got my London session here, and I've got my New York session here, and I've got my Asia session in this gray box where it's outlined. Now, Asia, and we're going to continue to cover some of what we have marked here. So if you see me start naming, so understand that I'm still referring to this list here. So Asia is a liquidity session. What do I mean by Asia is a liquidity session? What happens during Asia is what sets the mood for the day for London and New York. So Asia will give you different variation. As you can see here, this Asia session gave you these liquidities of highs and lows and began to give the idea that the market was going to be bearish. You see high, low, high, lower, low, lower, high, lower, low. It was giving the intention that we were bearish. And what happened during London? London came into the session, swept the liquidity of Asia, took the high of Asia after Asia low was taken, took the high of Asia. Now, the thing about Asia is based on the direction the market is headed, you're going to get what's called a sweep of Asia range, whether it's going to be a sweep of Asia high. If we're bullish, you're going to get a sweep of Asia high, where price may leave Asia low. And if we're bearish, you may get a sweep of Asia low and price leaves Asia high without being taken. And in most cases, when price is somewhat in a consolidation range, you'll see both levels of Asia gets taken, both the high and the low of Asia. Okay. So now let's jump into it. Let me go ahead and get into what today price action was. Understanding, as I said, that Asia is a liquidity session. So what does London do? London is the session that's going to sweep first a level of Asia, whether it's the low or the high. You're going to get that from London. So London session is going to give you a sweep of either Asia high or Asia low. It's your job to see which one is going to target. If price have not taken Asia high or Asia low and you're trading London, do not take a trade. Wait for one side of Asia to be taken, whether it's the high before you take a sell or a buy, or the low. Don't try to pick a side of Asia before the market takes a side. If the session is just consolidating like this, for example, and it has not taken Asia high or low, just wait. Do not trade until Asia low or Asia high gets taken. Then you can target the other side if price gives you confirmation, or you can take a continuation trade. Now, speaking of continuation, after London sweeps one level of Asia, it's going to give you a reaction. Usually, if it sweeps the low, you're going to get a minor reaction towards the middle. If it sweeps the high, you're going to also get a minor reaction. So either side that gets taken first, you're going to get a reaction right after that because there is a lot of liquidity in Asia high and Asia low as well. So you have to allow one side to be taken. Now, what does New York session do? New York session is there for continuation or reversal. Those are the only two things you're going to get from New York session. Either a continuation of what the market is already doing during London or a reversal to go and sweep the liquidity of London. Simple as that. Obviously, you may get a consolidation, but more than likely you'll get a continuation or reversal. So here's what happened today. For example, now we've covered basically the kill zone, the time frame, which I'll go more in depth once I dive into this trade. I've given you a little bit of explanation of what Asia session entails. We'll have other videos where I show you how to read the Asia range. But this is not a explanation of how to read Asia range. That in itself would have to be its own video because I need to show you how to read the liquidity of Asia, how Asia is showing you its unintentional movements, etc. So that will be a different unpacking. The London session, as I explained, is there to take one side of Asia first. That's very much so. As you can see here, London starts at 3 a.m. We can mark, let's say, Frankfurt already took Asia low. So what happened once 3 a.m. comes? London opened up. London went for Asia high. Simple. Frankfurt came. No liquidity of Asia low was taken yet. At 3 a.m., London opens up. No sides of Asia was taken yet. Up until 3 a.m. Once London kicks, what did London do? London decided to take Asia low. After London took Asia low at 3 a.m. on the dot, a minor reaction happened. You get a reaction right after to the top side, to the mid-level, and then price continued. Because it's a bearish trend, price didn't have to take Asia high, and you'll see during this explanation here. But let's carry on. So today's session, coming into the session, I was very much bearish on this trend because as you can see, I had from a 1 hour perspective, I had change of character internally right here. We had break of structure followed by breaks of structure. Basically, we had a series of break of structure to let us know that the market was bearish. So I'm going to look for pro trend. All of this was breaks of structure to the downside. Okay, cool. So when I go down to my 15-minute, I can see from knowing all of this breaks of structure, I can see that during Asia opened up, Asia low was not taken. London opened up at 3 a.m. right here. Let me go to the 5 minute where we can see, and I'll use the tool to properly mark where London opened. Where's my favorite tool? Okay. Don't see where my favorite, but let's fine. I'll pull it up through here. So London opened up at 3 a.m. right here. So this is where 3 a.m. for London. Okay, so we'll mark this for London when execution window. This is where London opened up. When London opened up, Asia lows not taken, Asia highs not yet taken. So we have no clear indication of which direction price is interested in because not the low or the high was taken. So London decided sweep low and pushed up and took Asia high and mitigated into this here supply. Okay, what is this here supply? I ask myself, I go to the 15-minute, I can see that it was a high. Get my highlighter tool. I can see that it was a high that led to a low that broke this structure. Okay, so that lets me know that price needs to retrace. So price retraced, fell to mitigate the high right here, pushed down, broke structure when this high led to this low now, breaking this structure. So I know that this range is strong because it led to a BOS, but the low or the high of Asia wasn't taken. So when price came back, it naturally induced this high as liquidity and mitigated this supply that was not mitigated the first time. And this supply gave me a reaction. And what did this reaction do? This reaction gave me an internal change of character and a break of structure. It broke structure right here. What was this BOS? What was this break of structure? Okay, well, this break of structure was the low that led to this high that mitigated this supply. This high led to now this low and broke underneath this zone. So that lets me know that this zone right here, this break of structure coming from this high was significant. So now price reacted from this here Asia low demand. This Asia low demand here did not cause any break of structure. It didn't lead to anything. Okay, so what am I expecting now? When price retraced back to it, I wait for confirmation because now I'm looking for sell already, but I needed to know where my sell is going to come from. All this happened during London. So London dumped down and gave us the break of structure to the downside, letting me know that the market wants to continue bearish. Stay with me. The market wants to continue bearish. It's been series of break of structure, break of structure, break of structure, break of structure to the downside. So it's only right that I look for pro-trend bias. Fast forward, when price came back up, this is now the opening of New York session. So London was completed. During London, price came, gave us that push up, took Asia high, mitigated that high time frame supply, gave us a reaction to the downside, break structure to the downside outside of London kill window. Okay, so at 6 o'clock, we said is the end of London's high volume session. So after this line right here, there's no more opportunities in London. They're all liable liquidity. So now let's go to time for New York session that opens at 9 a.m. 9 a.m., we have New York opening. So what is New York opening telling me right now? During New York opening, I see price is already retracing. Phase 2. We've already uncovered phase 1. What was phase 1? We've had this break of structure that happened to the downside. We've had this push. We've had this reveal of market intent. Price showed us the intent. So the next step is phase 2, which is the confirmation of retracement through change of character, break of structure. So when price retraced back to the zone and finally completed phase 3, which is the completion of the retracement, the next thing that I waited for is where is going to be my entry? Now, remember, kill zone ends at 12. So we have the kill zone right here. So between this here lines is what we are trading within. I know it might be a little faint. These two lines. So what happened? Price came in to our zone. Price gave us from the retracement, the completion. Price gave us a low, a high, a low, but respecting this previous low, and price started to consolidate. You can see this trend line. Price started building. So what we get is a one leg, two leg protocol. Price swept the low of this trend line, pushed out, gave us equal high, and swept the equal high to push down, giving us the internal break of structure right here. This break of structure confirm the sell for us to be able to enter, because now this became your change of character. Sometimes all patience. This became your change of character. This was your change of character, price retrace, and this was your break of structure. And this was pretty much your entry right here. I pretty much covered the low, the high of the zone, allowed price to come in, mitigate, and took the sell down. And I ended up taking TP shortly at the equal lows. The overall target was the Asia low, but I took TP at the equal low because I was content with price reaching this level. So this goes to show you that when you're waiting for market within the key time windows where the volume is high, you've got both London and New York within the same session, you're going to get more volume than when you're just trying to trade during Asia. Look at the size of the candles that are happening during Asia. They're very thin, very small price action. Look at the size of the candles during London price action. During the key time window of London, you get bigger candles. Key time window during New York, you get bigger, fast-paced candles. Look after 12. Look how it starts to slow down. Look at the size of them. Look how many candles it's taken just to create this small move versus look how many candles it took just to drop. So it's very important when you're executing. We only execute between 9 a.m. and 12 p.m. Any time after that, I do not take trades. And if I'm trading London, 3 a.m. to 6 a.m. Anytime after that, I do not take trades because these are the high probability window of price action that I can get the most volume. I have the banks involved. These types of trades is to target liquidity. What liquidity was I targeting? This equal low, the Asia low. These are the liquidities I'm targeting because Asia high was taken. The overall trend was bearish. So when price is coming, giving me a sell signal, the next level to target is Asia low because we've already taken Asia high and we're in a bearish market because as you saw on a higher time frame, as we've known, higher time frame hold more precedent. We've been break of structure, break of structure, break of structure, break of structure during London session before our session. We've been in a break of structure to the downside trend. So we know that sells were more probable. So therefore, if we're going to target any liquidity, the lowest point of liquidity at this one is the Asia low. Okay. So this is very clear as to what, for example, I'm using this today's trade as the example as to why we focus on the specific key time windows for our trades. Anything before those time are just data for me. Anything that's happening during Asia is just data. Anything that's happening after the London kill zone is just data. Anything that happens after New York is just data. Data is for me to see how was price behaving before the opening, what liquidity was being created before the opening of my session. And that's what I was able to see. Oh, before the opening of my session, I had equal lows being created right here, equal lows here. I had this high, low trend that price was showing, inviting early buyers. As you can see here, I call these early buyers who thought price was going to come back here, mitigate, and continue up. They were looking for a bullish momentum, bullish trend, but not realize that we've been bearish this entire time. So very important information to pay attention to. Now, time-based liquidity, same applies with what we were looking at right here. This is what you would call a time-based liquidity. This is liquidity being generated during our session. During our key time window, price came in, gave us this equal low. During our key time window, price set up this early buyer's trap. During our key time window, price gave us this smart money trap that was created here. On a lower time frame, you'll see that price left this order block here, inviting buyers into the idea that, oh, this low led to this overall high, breaking these structures. When we come back, we're going to mitigate and we're going to push out, inviting these buyers into this trade and only sweeping liquidity for my mitigation to then take them out. So this is where the manipulations happen. This is where during your key time window, you have those liquidity being generated. Now, I spoke a little bit just on today showing you this two-leg protocol. Though you may not fully understand what a two-leg protocol represents, I have many videos in this channel where I explain my entry model. Whether it's a change of character, break of structure, that's one form, which you can see here, both of my entry models were present. We've had a change of character, break of structure, here's was our entry. And if we were to enter off the two-leg protocol, we had both two-leg protocol. We had this one leg right here, price retrace, second leg right here, and we enter off of this zone right here and still covering the high. So either way, we can see that both of our entry models showed up. And we also have our entry criteria. We're coming from a high time frame supply that we've mitigated. This high time frame supply was a cause of a break of structure. It caused a break of structure. Then price came back, retested, and it caused another break of structure. So this is now a protected high because it's coming from this previously protected high that's coming from a daily supply. This overall zone that the market is coming from was a daily supply. So I'm putting the context together right here. This was the overall daily supply we're coming from. So when you're able to add your confluences and stack up your confluences together, you can see what leads to why you're taking certain trades. It's heavy flow of going with the price action, staying with the trend. You know, as you hear, the trend is your friend. This is the session, the opportunity where I'm focused on the trend. Okay. As you can also see, if I'm looking at it on another scale, because there's more than one ways to skin the cat, what you can see is we had this low led to this high and broke above this structure. This was the previous, the high time frame, the 4 hours, 1 hour. This was the reveal of market intent here. What happens after phase one? Reveal of market intent. Phase two must begin. The retracement through change of character, break of structure. Is my retracement completed? Let's take a look. Have I reached a premium or discount level? So I'll take my fib tool from this low up to this high. And let's see, where are we? We've just reached 50%. We have just reached 50%. So what does that tell us? We didn't even reach the discount level yet. We didn't reach the discount level of price to fulfill a bullish trend. Can we leave from here at 50%? Yes, we can. Institutions can get involved right here. But at the same time, we can also get one more push to the downside to come to lower level to complete the retracement of phase one, then phase two. Phase three gets completed here, and now we back to repeat to create a new higher high. It's very simple. It's the phases of the market structure, and all you're doing is going into lower time frame and doing the same thing once again. And all I did was go into the internal time frame, 5-minute, 15-minute, to do the same thing. Right here, the market gave me a reveal of market intent because I know that we're still looking for sales. Reveal of market intent. Price is retracing to complete the completion. Now I'm looking for my next reveal. I'm gonna keep looking for that type of reveal because this is now the next reveal of market intent has been completed. You can see the breakup structure. So what is price potentially doing now? Most likely retracing. Phase two. Is it to continue this low? Perhaps, but we know that we're at 50%, so now we would have to be patient and let the market show us its hands. Is it going to retrace and continue down, or is it going to retrace, give us a reaction, and then push up because it's reached 50% and it's time to go bullish again? All of that is the probabilities of where price action can lead. So without further ado, I covered a bit of the kill zone, allowing you to see and understand why we trade within these specific time zones. So whenever you're looking for the high volatility in the market, the likelihood of your zones holding, your order block holding, being respected, make sure it is within your key time window that price is mitigating your order block. If you're getting a mitigation during Asia, you're getting a mitigation during Frankfurt session, you can't expect price to respect those levels. You're getting a mitigation after 12 o'clock, you can't expect price to respect those levels, especially when there's no volume in the market. Okay. And the breakdown of Asia, we'll have a separate video where I break down how to read Asia range to give you more clarity on how to read the inducements and the liquidity, the traps that is created within Asia. And next and lastly, we spoke on the New York session and the London session on how they are liquidity-based sessions. Liquidity-based sessions is what you're looking for within the New York and London day time frame. Okay. So London will sweep the liquidity of Asia, giving you the first sign of direction. And New York will either give you a continuation, as in this case, you saw the continuation was a bearish trend, is what New York did. London went bearish, retraced, New York continued. Simple as that. Okay. And if New York was to have a medium inducement here, then it would be a reverse for us to continue, but to switch direction. So very simple. It's all about allowing price to develop in front of you, letting the market show itself to you, and it will all make sense. As you can see, even these zones, why do I mark this, for example, as an early buyer's trap? Look at the time that it was created at 12:30. Look at the time it's being mitigated. Middle of the afternoon on Sunday when Asia opened. You can't expect zones like this to be respected. Look what price did. Came up, fake people, whoever trades Asia into this and then took them out. Can't expect these types of levels to be respected. Look at this Asia low. When was this mitigated? At 6:10. What did we say? After 6 o'clock, it's no volume. So that's lunch break for London. So what happened? Price mitigated it, gave them a false reaction, mitigated it again, then gave them a false reaction for this retracement. And they're thinking, oh, this is going to be bullish. We're in a bullish trend. That's what invited more buyers here because of this push out from this zone. But we know that this is a zone where the Asia low, Asia low was not yet taken. Yes, Asia high was taken, but this is a mitigation outside of 6 o'clock, outside of London key time window. So naturally, when our key time window came at 9, we get this mitigation of a supply. What supply is this? A high that led to a low that broke structure during key time window. This high caused a breakup structure during 3 and 6 a.m., not before, during the key time window. So banks were involved. Their institutions' fundings were involved in these areas. So when these areas, for this, there's no institutional footprint in these areas. This is Asia. This is way before 3 a.m. This is almost printed. So of course, when we get our mitigation, once again, inside of the same hands who created a breakup structure during key time window, those same hands are now back during key time windows again, remitigating where they left a lot of liquidity that they have not released. Same thing happens. We get this big dump because we're within key time window. We're mitigating our supply within key time window. We're with pro trend. We allowed the banks to build the liquidity, invite early sellers, and build all the traps that we needed in order to now sell against them and sweep them as liquidity. See how fast we're able to come down. Reveal of market intent, like I said in the other videos, it happens fast. The retracement, very slow. Look how many candles it's taking just for price to retrace up here. But when it comes to come down, 1, 2, 3, 4, 5, 6, 7, 8, like fast, boom, 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 boom. 3 candles alone just took out over 10 candles right here, just off of 3 candles. One, two, or 2 candles, matter of fact, just 1, 2 bearish candles just took out all of this level. That's volume, that's intent. That's when you have the backing of the institutions that are trying to push the market a specific direction in order to not allow the retails time to get out of their position. Okay. Without further ado, this day 4 is a shorter call, simply because I wanted to just go over a bit of the Killzone sessions within today's live price action. The day 5 that we're going to cover, I'm going to be more going over the setup of what that looks like, and we'll dive into what a entry model. I'm gonna give you one of my entry models, how to see it, how to look for it when it comes into your time frame, time zones. How do you position yourself? When do you know it's valid? X, Y, Z. So we will cover that in day 5. And that was the end of day 4. I tried to make it quick, keep it small, keep it subtle, so that you can get the value from it. Watch it over and over again so you can better understand the depth of this type of price action. And most importantly, take away from this is the key time window. That's what I really wanted to focus on, is the kill zone. Understand the kill zone, that if you're going to make sure you take a trade, make sure it's within the key time windows. Do not take trades outside of key time windows. You are more likely susceptible to being stopped out of your position because you do not have volume on your side. Okay? I appreciate you guys once again for tuning in. Without further ado, peace.